Hi everybody, I just want to check in and give my thoughts on the current volatility due to the tariffs. On the screen now is a very close look at the S&P 500, the SPY ETF. This dark area is Friday. The market was actually up very close to the all-time high, basically at the all-time high on Friday. During the day, the market declined as people started to understand that the tariffs announcement was going to be made. The announcement was made after the market, and this is the after-hours market. Wynn Capital can trade during this period, and we sometimes do if things reach our target. So this was Friday's after hours. Then this gap down is the pre-market. The market trades over the weekend, and again, we can trade during these periods. We have the capabilities of doing that. So it was not a surprise to anybody that's relatively sophisticated to know that the market was going to gap down today. We gapped down about 2%, and I'm going to zoom in a little bit. So this is regular hours. The volume during the after hours and pre-market is very low. It's not very liquid. Spreads are wide. But then when the market starts, we have regular trading with very high volume. This opening was down about 2%. We rallied a little bit, then we fell a little bit, and then each of these bars represents 5 minutes. In 5 minutes, the SPY went from 590 to 595, about a 1% move. So currently, we're only down 0.7%, and we're about 2 or 3% from the all-time highs. Now we're taking a look at a much longer view. This is the 3 years of the S&P 500, and we can see that this little channel that I've drawn is from the end of 2023 and all of 2024 and now part of 2025. We've been in a very orderly and tight range for over a year. Since the election that happened around here, we had a bump in here. We're right in the middle of the new administration range, which has been very tight. I anticipate a lot of volatility, and verbally we're having a lot of volatility, but we're not having a lot of volatility in price. This range is pretty tight here. We did have at the beginning of the year a retracement all the way back to the pre-election price. Then we rallied. Now we've been going sideways for a little while, but I really want to impress that this day is a little bit stunning because of the news and the type of policies and the suddenness and the unconventional way this administration is going to operate. And I think we all intuitively think there's going to be more volatility. And emotional volatility is happening, but price volatility is not happening yet. And again, today's decline, and actually the market, it's important to understand the news, but to watch how the market reacts. It's only 8 o'clock, on the West Coast, and the market is not really getting scared. These investors are buying this dip. We don't know what these dots are going to look like to the right, but I want to just reiterate a couple things. Your portfolios are appropriately invested based on where we are in the market, which is overvalued, your personal circumstances, and an untold number of other variables. If the market declines, it will be an opportunity for us because we're at the low end of our allocations, and we'll try to buy on dips. The rules for that are complicated and at our discretion, but we'll be buying on dips for most clients when it's appropriate. The other factor many of you are aware of is that we hedge accounts. So we currently have a hedge on that mitigates declines to some degree. During the low point of today, the hedge for the declines that were hedged was mitigating about 20% of the decline. As the market rallies and the prices go up, the value of the hedge declines. And I just want to emphasize, not everybody is hedged. An enormous amount of our current equity is hedged, but conservative and moderately conservative accounts are not hedged. So the benefit, you don't need a hedge when you have a moderate account already. I hope this is a little bit helpful. And as always, just email or call if you have specific questions, and we'll get back in touch with you as soon as we can. All right. Thanks a lot. Bye-bye.